Welcome back to the channel. In this video we are going to cover the gold price prediction for next week, and I will walk you through it step by step from what the big money is doing all the way down to the exact levels that I'm watching for next week. So let us get into it. Now before we discuss the chart, let me give you the big picture in one simple line, and the line is, as you can see, gold just closed the week at $4603 roughly, and that is up more than 5% on the week, and that is a big move, and there is a real reason behind it, and we will break that down later in this video. But first, let me show you what the smart money is doing, because that tells us a lot about where we go next. So let us move to the first chart. This is COT report, which means the commitment of traders report, and it comes out every week. From this COT report, we are going to focus on managed money. In simple word, these are the hedge funds and the big trend following traders. When they are buying, it usually means the momentum is strong and real. Now look at this, the long positions, these blue bars, these, as you can see, keeps growing. And right now they are at 154595 contracts, and the short side over here is tiny, only 12947. So the net long positions, they are climbing, as you can see. So they are focusing into the buying side. So the big money is clearly leaning long as per this report, and they are still adding. But here is one thing that we have to keep in mind: when almost everyone is already long, the trade gets crowded. That does not mean it will reverse tomorrow or next week, but it does tell us something important, and it tells us that we want to buy the dips, not to chase the price at the top. So we have to keep this in mind. Yes, COT sentiment is bullish, but we have to look for the dips to buy. Now let us move on to the weekly chart and look at this panel on to the right side. This gives us the full positioning picture in one place. Over here you can see the large speculators are net long about 218000 contracts, and they are still adding to the long side. The commercials, these are the producer and the hedgers, and they are net short. That is completely normal. They usually take the other side of the trade. And look at this, the open interest jumped up, which tells us fresh money is coming into the market, not just old positioning closing out. But we have to pay attention to this one line over here. You can see spec percentage of open interest at 54.4%, and as you can see it is saying stretched in, means the positioning is getting a little hot. So this is another data is telling us the same thing. The trend is up, but do not chase it, buy the dip instead. Now let us discuss the supply and demand levels on weekly chart and look at the price here. Gold is well above this demand zone, and the demand zone is 3884 to 4059, and there is open room above, as you can see, all the way up to this weekly supply near 5010 to 5238. So the road is clear and is showing higher level is possible as per this overall closing. So the road is clearly fairly clear, we can say, on weekly time frame. Now the daily chart and the macro driver, as you can see, look at this box on right again. This is the intermarket panel, and it shows us the forces that push gold around. As you can see, the tailwind score is at 79.8, and the driver split is 76% bullish and only 6% bearish. As you can see, the dollar over here is down, real yields have gone flat, miners are up, and gold in euro is also up. As you can see, almost every driver is pointing in favor of gold right now. So now look at the price over here. we have a fresh demand zone at 4329 to 4436 right under the current price. So that is our first real support if we get a pullback. And above the price, look at this, there is open air, nothing major until the weekly supply that we just discussed. So the daily macro driver and the intermarket is also favoring the bull side. Now let us move to the market structure now, and this one is important, so we have to pay attention over here. As you can see the structure here clearly saying bullish, and look at this label, active setup, HL pullback. In an uptrend, price makes higher high and higher low, like as you can see right over here. So a higher low pullback is just a healthy dip before the next push higher. And that is exactly what we want to see in the strong trend. Now look at this box down here. The 1 hour, the 4 hour and the daily are all bullish. Only the weekly is still bearish and the 15-minute flipped bearish on the small dip. So the main trend is up, only the very short term and the long term weekly are lagging, and that is normal in strong move. So the overall structure, overall price structure is currently favoring the gold except this weekly and lower time frame. Now let's move on to 4-hour time frame chart. Over here we have wake of read, and look at this. The face is D trend and the bias is accumulation. As you can see, the last event was a sign of strength. In simple terms, that means the buyers took control and pushed the price up with real intent. And look at this detail. The volume on the push is light, only 0.8 times of the total average. So now you might think low volume is bad, but here is actually a good thing. It means this is a calm, controlled move higher, not a panic spike that usually reverse. So this is a good sign actually. Down here you can see the demand ladder, our buying zones, one at 4329 to 4436, then a strong one at 4150 to 4213, and the deeper one here 3884 4059. We are not going to focus on this, but we have to focus on the higher levels. And as you can see, every dip so far has been bought. So 4-hour time frame is also pointing that we have to wait for a dip and then we can look for the buy. And now the dollar index that we have to watch. Now this is the chart that is very really important. So let us move to dollar index. The DXY here is the key thing that need to understand as a beginner. Gold and dollar usually move in the opposite direction, as you know. So when the dollar goes down, gold tends to go up mostly. So a weak dollar is a fuel for gold, as you know. Look at this. The dollar structure is bearish, as you can see, and the price at 98.84 is kept by this supply up here around 99.5 and again near 100.7. As long as the dollar stays heavy under 99.5, it keeps going to support the gold. But we have to keep an eye on this. If the dollar close back above 99.7, that is the first warning that it want to bounce and can put pressure on gold. So we have to watch this level very carefully. Let us move to the 1-hour chart now, because this is where we actually plan our entries. Look at this rising trend line. The price has been riding it cleanly since the low on here, as you can see, and that is the sign of steady healthy buying. Right now the price is at 4603 roughly, and it is holding above this fresh demand at 4469 to 4489. Below that we have the bigger daily demand, and it is at 4329 to 4436. So those are our two buying areas that we have to watch very carefully. So as long as the price stays above 4329, gold is in a tendency to move up. Okay, now let me explain the story behind this big move that we have seen this closing week, because honestly this is the part that really matter and most people is not catching this in proper way. As you know, the biggest problem for the US right now is rising yields. Last week the long term bond yield hit their highest level in almost 20 years, and high yields are a problem because they make borrowing expensive for the government and the everyone else. So how do you bring yield down? One of the easiest way is for the government to buy back its own bonds, and that is exactly what the US Treasury did. On the 19th of August, they announced they will at least double their bond buyback from 2 billion to at least 4 billion per operation starting on the 9th of September. And here is the simple logic, and this is the key concept I want you to remember. When the treasury buys back bond price go up, and when bond price go up, yield go down, and when yield go down, holding bond become less attractive, so that money looks for a new home, and a lot of it moves into gold. So that is why gold jumped around 3%, silver jumped around 4%, and the gold miners rallied 8 to 9%, all in a single session. So the headlines were talking about over a trillion dollar moving into gold in just few hours. Now let me be fair and balanced here because that matters. Some analysts says these buybacks are small compared to the whole bond market, so this may not hold yields down forever. So treat this as a strong push and change in the mood only, not a permanent fix. And there is one more piece to this. Goldman Sachs put out a note on the 21st. This says the demand for gold call options has jumped sharply. Let me explain what that means in simple words. When traders buy a lot of call options, the dealers who sold those options have to buy gold to protect themselves as a price rise. So that extra buying pushes gold even higher. So it becomes a bit of a snowball effect. Goldman keeps their target at 4900, as you can see from this note, by the end of 2026, means by the end of this year, with room above that. But they also warn this snowball work both way, so expect bigger swings both up and down in the coming week. So we have to take care of that. All right, before we go to the setups, let us move to the economic calendar for next week because this tells us exactly when to be careful. Monday and Tuesday are quiet, as you can see, nothing major. Then look at Wednesday, the 26th. We get core PCE, which is the inflation number the Fed cares about the most, plus GDP and a few other reports. And then Friday, the 28th, is the big one. We have a speech from the Fed chair plus an important jobs revision number. So keep this in mind. Wednesday and Friday are the days that can move gold fast. Do not go in heavy right before the data. Let the market react first. So putting it all together for this gold price prediction for next week, which side is favored? So the answer from me, the long side. We are going to buying for the dips. The trend is up, the big money is long, the dollar is weak, and we have a real catalyst behind the move. The only question are that positioning is little stretched, and we have that data risk on Wednesday and Friday. So we buy pullbacks. We do not chase the top. So here are the three setups that I'm watching for the next week. Setup 1, the dip, the first dip, and this is my main one. So we are going to look for pullback into 4469 to 4489. That fresh demand stop we will put below 4436, and the target for this setup will remain at 4640, and the second target around 4720 roughly. And the setup 2, if we see another big dip, if price fall harder, we are going to look for buying into this zone, the low 4329 to 4436. This is the second setup that we can look if we see a big fall into the price or big sudden down move. We are going to look into the this area, and the stop of course going to be we can put the stops below 4300, and the target for this setup is of course 4530, and the second target of course the high 4640. And the setup 3, the continuation, if price keeps in momentum and break out and then wait for a daily close above to this high roughly 4640, then we are going to look for buy. Means a daily close above this is a clear breakout, and we can look for buy, and we can put stops below this area 4560, and the target of course 4766, and the second target of course 4800 or higher side. And here is the level that tells us we are wrong. So the levels that we have to watch overall is 4329 on the daily. The short term bullish picture breaks and we step aside if this level break. So we have to watch this level 4329 carefully. So let me wrap this up for you. Gold is in strong uptrend backed by real catalyst, and the next week my bias is long on the dips. But the price is stretched after 5% week and we have big data coming. So the plan is simple. Let the price pull back into the area that we discussed, and then we are going to look for the buy. And that is the gold price prediction for next week. And just so you know, this is not just talk. We call this entire gold run live from 4020 base all the way to this high. That is the 8 setup in a row that all paid about 575 points. The breakout, the take profit, the every dip buy, all of it was published before the move. If you want the daily read and the exact trade setup with entry, stop and target before the move happens, you can join the Telegram and the link is in the description. I'll see you into the next one.